78 level. And obviously that 68 to 78 level becomes the price that the S&P's just started to stall into. Started to stall into that 68, 78 S&P top line again. And well, you can see what's happened on the S&P. You know, we've obviously been here before. 68 to 78. You can see it's where we got jammed here the last time. 68 to 78 puts you into this little box area here. It is a dangerous area for sellers. It's a dangerous area for buyers because obviously there's a dealer that's trying to make up his decision about whether he wants to take it bid above here or whether he wants to stay on the sell side. If the dealer gives up on this, that could be very bullish equities, right? If the dealer decides that this is not worth defending, as a now since they're short, then of course that liquidation of that short position could open the door to a very aggressive upside move by equities, which obviously would be quite an interesting afternoon for the longs, wouldn't it? But if the dealers hold fire on this, they stay short, then of course that's probably the decision it's going to be for the rest of the day, isn't it? So this is going to be a critical price level. If you don't like dealing around these critical price levels because there's games and there's lots of noise, guess what? Just don't deal around these areas. Don't deal around them. Wait for something clearer to show up, guys. But sentiment certainly has soured off this number. You see that just from the simple little DAX trigger for yourself. You'll be able to recognize that that little divergence is now in the DAX at the top edge here. And you'd have been able to spot that top line sell off the 580s. It has dropped back down to 560s there for a very nice 500 euros. 500 euros, guys. 3 minutes. 3 minutes. I know Cuba was trading in the DAX market, so perhaps Cuba's had a bit of business done on that little sell trade at the top edge, but certainly a sell coming in off the top edge there in terms of that sentiment. And this is the same, technically the same level that we're dealing with on the yeah. So it's working out relatively good. You look at the other bits in the markets, and we've seen just enough of a pause, not a big pause, not a big sell, but enough of a pause on the Dixie Vol to just hold the price offered here. Just hold the price offered. And there's a sell coming in there. Very, very nice sell coming away, wasn't it? A very nice sell. Doesn't mean it's bearish, but it's certainly no longer bullish on that retest, that was for sure. And that 580 sells now just traded 555, 556s. Wicked. How did the bond do? Well, we've held the bid. We've held on to the bid, and it's done all right. We bought into this, as you know. We came back into with a buy trade here off the bonds, and we were looking to try and retest the highs. This still looks pretty good to retest those high prices. So a little bit surprised we didn't get that 12.13 print on that trade. So that was a little bit disappointing. Again, when we look at the yen, you can see why maybe one of the problems we've got just now, and that's the dollar just giving up a little bit of its charge, right? So obviously with the dollar giving up a little bit of this charge here to the downside, then of course, you know, that's going to put an offer back into bonds at higher prices. That's what we're starting to see now, isn't it? We're starting to see that pressure, just meaning buyers not willing to pay 10s, not willing to pay 11s. And if buyers aren't willing to pay 10s and 11s, it means that we're going to rotate off of these higher prices for the time being, isn't it? So still looks good on a macro, but we're obviously running out of real estate up here at the moment, and that's what we've seen on equities. We've just called it. You've heard us just calling it yourself. You've seen that sell coming in. So that DAX sale, how good did that DAX sale come in, Cuba? Pretty good, right? So the DAX sale that I've just been talking about, when we talked about it, it was trading down into this little 20 tick box here, but it's obviously driven aggressively now for 40 ticks. It's just done another 500 euros since we talked about it. Since we talked about it, it's just done another 500 euros. That's pretty good, right? That is pretty damn good. Anyway, we're into a key level here. You can see there was a big change of behavior with a bullish order block in the background. So you would have been, I would imagine, in the drawings of this trade narrative, you'd have that bullish order block already visible. And as you trade into this area, that is going to be a very, very nice little target print to just bag and tag some of that lovely cash off the high print that we've just been talking about. Pretty good? Pretty good. Thank you very much. I like it. I like it. Did we get it right? We got it right. Now, the one that I'm looking at now is how high can oil go? Big question, right? How high can oil go with this dollar giving you the charge there? So obviously the oil becomes something that I am now looking at because of that high print. So I'm going to put oil into an offer watch just now and see if we can catch a little bit of a flip off the 75.5 area. So I am now looking at a possible offer watch. We've got a heavy delta bid. We've got a heavy book bid. I'm not going to be selling it anytime soon, but I am now thinking about that 75.5 top line oil for a little sell side, at least a profit take by the buyers at this stage, yeah? Makes a sense, right? Makes a lot of sense. And did anybody join me? Yes, we did get another trade on, guys. We just got the offer that we were looking for. We got the trade on, and we've done $1,000 on a 5 lot. Oh yes, we've done $1,000 already on a 5 lot, as we literally were just talking about it, as we'd just finished talking about it. We got the offer coming in. Did we get it, guys? Did we get it? Yes! Brilliant. Look at the offer coming in, guys. Is that not the most obvious offer you've seen? Look at that offer coming in there as we tested the 50. We shouted the 50 price to you. We told you what we were going to be looking for, and we got exactly what we were looking for. We got the short sale on at 43s. It's just traded 0.9s, 0.10s. What was the lowest? 10, 11s. Sell side only. We've just made another $300 per contract on a 5 lot for near, well, we're now $2,000 on a 5 lot, guys. $2,000 on a 5 lot. Was that not easy? Did it do exactly what we said we were wanting it to do? And therefore, did you trade it? If not, why not? Type in the box. Explain your reasoning why you didn't take the trade. Please tell me. If you didn't take it, explain why you didn't take the sell trade when the sellers were coming in. Why you didn't take advantage of all these buyers that are getting jammed. Why you didn't take the deal. That's a very obvious deal. You had about 60 seconds to get that trade on. So you can't use the excuse that it was too fast. You had about 60 seconds to see the offer coming in. You saw the bids coming in and getting jammed. You saw the value coming in, big style. And we've just taken a $2,000 winner out of the markets on a 5 lot. Easy, isn't it? Easy. can see from that $2,000 swing, we picked up $1,840. You see that? You'd already seen this trade here. You'd already seen those balances. So that was the oil trade that we just closed. So out of that $2,000 swing, we made $1,840 of $2,000 potential in that trade. Now that is pretty good going, right? That is pretty good going. That's nearly a 3.0 rating on that trade, which you can't get any higher than 3.0, right? That's the highest you can possibly ever get. Well, on a single swing. Of course, you can add to the trade that can give you more than 3.0, but you get the basic idea on a single sell trade. That sell trade was worth $2,000 on a 5 lot. We got $1,840 out of it, which is unbelievable. Brilliant trade, cracking outcome. You can see we closed at exactly the right price, and it's now doing absolutely nothing in that area. It's doing absolutely nothing in that area now. It's just switching about, doing hee-haw. It's looking good, guys. It's looking like we're going to have a good afternoon. I'm loving these trades. I'm assuming everybody else is loving them as well. I'm assuming you guys are making a lot of money off of this stuff. How did that DAX sell do, guys? Not bad. We obviously we took some profits at 35, but take a look at what happened to that DAX sell. We've now traded back into these bids that were obviously coming from the data itself. There was the bids from the data. And you can see we've traded into the bids for a nice easy money profit take again. Value's just starting to flatten out a little bit on that candle there. It's this red candle that we exited. And we got down to 515s from a sell of 580, which is a 65-point DAX move. Oh, yes! 65-point DAX move. Who doesn't like that one, guys? Who doesn't like a 65-point DAX move? That's 1,600 euros. 1,600 euros. Pretty good. I like it. I like it. I like it. I like it a lot. It was a nice easy money opportunity to buy bonds. Did anybody play it? The bid never came in, so you were actually trading without having access and the availability of book buyers. But if you like the trade enough, you can see where the measure took you to. So the measure was exactly where it should be, right? So the measure was telling you you probably could start bidding around about the 13 area. Now, the reason why you might have bid it was because we started to see the knob spread sell opportunity starting to show up here, right? It showed up on this red candle here, so we need a discount, and that's the discount candle there, right? So this is your discount candle there. That might have been your buy opportunity. Now, as I said, the bids never came in behind you, or it never came in with you at the time. So if you took it, you were having to trade very actively on that trade. You were taking a little bit of a gamble on it. But obviously that gamble's paid off quite nicely so far. You've had a good upside pop from the 14s, trading a high price of 26. I mean, we should be trading this valuation suggests that bonds should be trading at 138.10s. So based on that valuation of 138.10s, you're obviously looking at this as a possible buy trade. Now, what else could we be concerned about? Well, let's work our way through the absolutes for a second. The absolute rate curve obviously was telling us we should be roughly where we were, if not perhaps even slightly lower. And I think that's why we probably never saw any bids coming into the book, because I think a lot of people were looking at it saying, I'm not sure. And that's why I said it wasn't brilliant, and if you were aggressive with it, you might have been okay with it. What else could you have added to the trade storyline? Well, of course, the story of real yields is always a story that I never lose sight of. The story of real yields suggested that this looks a little bit too much of a discount. If we look at real yields, of course, this is a negative correlation, as you know. You can see that we kind of reached this level here on this candle here. Well, we've obviously got a discount already, but in this candle, real yields don't move. So that gives us a discount to real yields. That's the reason that this became that little bit better than you'd originally thought it was going to be. And obviously the upshot was pretty good. Having said the upshot was pretty good, we never regained the real yield, and obviously we've lost the real yield in this short term here on this little green candle. So a lot of people that were long, like ourselves, simply closed their trade off, and they're now waiting for another opportunity. So that was the exit price in there, which is why we're now telling you about it, because obviously it was a kind of gambly type trade. So you're not going to hang about gambly type trades. You're going to get rid of them as soon as you get any evidence that they're busted. And this one's busted on that green candle. You can see real yield started to rise, busted the bond longs, and then we've got a sell-off coming back in again. Suggesting at the moment, of course, well, you can imagine we're still discounted on a macro chart. So I'm not going to be against looking for a possible buy trade back into this storyline again. So we are looking again, and you can see that there is a little bit of evidence starting to form. Now, as I said, the last time we took a trade here, we never got any book buyers, and I think that was my biggest concern out of all of them, is we never saw any book buyers coming in. So that's something I'm now watching. I am going to put bonds into a bid watch type storyline, and we'll be aware of the fact that we're just looking for that little bit of a bid this time to make the trade a little bit safer. The yen is coming down a little bit, putting a little bit of sell-side pressure into this market. And, you know, it seems as if against the likes of the Forex markets, bonds looks a bit fair. So I'd like to gain a little bit of a value edge against the dollar itself, and then we can maybe really start taking advantage of a little bid coming in on the bid watch. But happy to let this swing through just now. I'm just watching the yen against it. I'm watching the curve against it. Not going to start jumping in front, and we'll see if it's got any opportunity for us on a bid watch storyline. Lots of delta getting trapped on this at the moment, so that might just put a little bid in. It hasn't yet. Usually when delta gets trapped, I want to see the dealers doing a fast flip. And what I mean by a fast flip is what happened on oil. So when I see the deltas getting trapped, I want to see the fast flip on the book to get that short sell in. Do you see that? That's exactly what I'm looking for, is the fast flip on the book to get the short sell against that dealer. The delta getting trapped. The bond never gave as much of a fast flip there, so I was very, very, very cautious about getting the long trade on again. And yep, that's okay. There's nothing wrong with that. Very cautious. That's okay. We've done okay there. We've managed to get our stops in a break even. Did anybody join me on the bonds this time? Second attempt. This time we did get the book. We did get the book this time, guys. Okay, so we did exactly what we said we were going to do. We did exactly the same trade as we said we were going to take. And if I show you, it's almost exactly the same as that oil play. There's the trade just there. Do you see it? So the book went bid just there. So the book went bid there. So anything below that trade now, you see the big sell getting jammed, that sell coming in there getting jammed, getting jammed, getting jammed, getting jammed, getting jammed. And then the buy coming in and giving us a little bit of an upside pop there. It's $1,000 on a 5 lot. That's okay. We'll take that any day of the week, guys. $1,000 on a 5 lot off of that little buy side reversal. So that was pretty nice, pretty easy money, right? Pretty easy money. We got the 5s, the low price was 4s, and it's traded 12s. That's sexy like a box of chocolate strawberries. Bid watch, guys. We got the bid. We took the trade. Pretty obvious, right? Bid watch. We got the bid. We took the trade off the 5s, and it's now trading 12s. You wonder why we make money? Because we trade. That's why we make money, right? We trade. We don't watch things. We get involved in things. We try and take advantage of things coming through the markets. You know, we're not observers. We're not going to make any money being an observer, guys. Sentiment's still souring just now off this bid level, so I'm a little bit concerned that we might see a little bit of a break south on this. You can see that from the DAX itself. You can see the sentiment still souring at the moment coming into the cash open. And that's obviously giving us a few more concerns about going long off of these bids. And the bids level obviously was the data release after the buyers came in at this price. So that's a level that we're now very aware of. And with those bids in those locations, we can obviously be mindful of the fact that this is a level that we have seen these guys, and you just kind of mark them off on the screens, right? You mark them so you remind yourself about them. And that's good because it's pushed the price back up again. So there might be a sellable opportunity as we come into the cash open to maybe capture a little bit of upside here for a sell. But let's see what the cash open brings, and we'll see if we can make anything of this trade.